Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and we just have 30 minutes left for the trading session. And so far, it has been a subdued trading session. If you look at the Sensex levels, we have slipped with a cut of about nearly 500 points that is coming in for the Sensex. Nifty has also way below that 25,000 mark. We've also broken below that 24,950 mark as of now itself. But yes, if you look at India Wix, that has also jumped by about 2.5%. Given the day also coincides with the monthly expiry, so some price swings has been visible as well. But yes, coming to the sectoral performance, how we are faring at this point of time, barring the Nifty metal and small gains which we can see in the private banking index, all of the sectors have succumbed to the selling pressure. If you look at the auto index, it's seeing a cut of about 0.7% as of now, and majority of the automakers, for instance, your Tata Motors is seeing a larger decline of about 2%, M&M, Hyundai Motor, Eicher Motors, all of them seeing a cut of about nearly a percent or so. But yes, apart from the auto index, the one index that has also been in news lately, that is your IT stocks. They also saw a large cut as of now, with about a percent cut coming in as the visa fee hike hangover continues for the sector itself. But yes, all in all, we are into the red at this point of time, and barring the Nifty metal index, which is showcasing a gain of about nearly 0.5%, majority of the sectoral indices are trading with a negative bias. But yes, coming to the top Nifty gainers and losers, where they stack up on the charts at this point of time, Bharat Electronics towering the Nifty 50 gainers list. It has snapped the 5-day losing streak, and it is showcasing a gain of about 2.3% itself. Hero Motocorp also did well, and you can see a 1.5% gains coming in for the automaker on the back of the launch of its new scooter, which is your Destiny 100, and you can see some good buying interest which is coming in the markets as well. On the other hand, if you look at the other sector stocks, Hindalco also did well, nearly a percent gains coming in for the counter. Axis Bank with about a percent gain, ONGC, Bharti Airtel also one of the top Nifty gainers of the day. However, on the losing end, Tata Motors nearly with a 3% decline coming in for the counter after the £2 billion cyber attack hit that has come in for the ARM JLR, and that is why you can see some bearish sentiment which is coming in for the counter itself. TCS also down with about 2.5% cut coming in there itself. Trent also down for the 5 times in the last 6 sessions. Today also it's seeing a decline of about nearly 2.5%. Power Grid with about 2.3% declines. Asian Paints and NTPC, some of the other losers on the Nifty 50. But yes, all in all, we are, so far this week, Nifty has showcased a decline of about 1.5% itself. But how we are headed going ahead, we'll understand from our experts of the show. Without much further ado, let's get on board with our first guest of the show. Joining me is Nirav Chheda of Nirmal Bank. Nirav, good afternoon. Nifty is now on course for its 5th day of losses, and it's also taken off that 25,000 mark. What is the next support level that we can watch out for?
Yes, hi, Lovisha. Not a very good day actually for the traders, with almost everything coming down. Also, as you said, 25,000 has been broken, but if you see the data, 25,000 puts hold a considerable amount of open interest built up, and sometimes it does go below those important levels and then bounces back on the next day. So definitely feel that we can see some buying, probably coming in tomorrow onwards. So I would be a buyer in this market at this point of time. Even though 25,000 has been broken, but with a strict stop loss of 24,850 on the futures, if that is broken, definitely, you can see further cuts up till 24,400 odd levels. But as of now, with the support being so close, one can look to buy Nifty at these levels with a stop loss of 24,850.
All right, buy on dips market at this point of time. And Nirav, let's get your view on the metal index also, because that index has done quite well in today's market, and it is one of the top sectoral performers of the day itself. What are the next moves we can watch out for, and anything that you're liking from the space?
See, metal-wise, if you see in the last 2 years or so, this is one index that did not, participate in the upward rally, and it was largely in consolidation. Now you're seeing, most of the stocks actually breaking out. So yeah, they are actually the leaders now of this whole new leg of rally that has come in. I definitely believe Tata Steel, SAIL, JSW Steel. In fact, all the metal names, they are looking like they will go up from here. So yeah, if I have to name, the best one, I definitely believe Tata Steel is one stock that I believe can do well going forward, and one can look to buy this stock. An inverse head and shoulder breakout has come in around 164, 165 odd, and expect this stock to move up towards the 200 odd levels going forward. So one can look to buy the stock at current levels. 160 is what you can keep as your stop loss.
Okay, Tata Steel is something that we need to watch out for in the upcoming sessions itself. But yes, let's move on and discuss about the IT index also. It is one of the top sectoral underperformers for this week itself, and it is down for the fifth consecutive day. How long will this visa fee hike hangover continue and dampen the sentiment, Nirav? What are we estimating?
Yeah, I thought, after the announcement, on Monday, the most of the impact should have been, taken in there itself. But unfortunately, the supports were broken even after Monday. You're seeing, 3 days of further selling. And I believe now Nifty IT index is coming towards a very important support of 34,300 odd. If this is broken, you can see a fresh, shorts being seen in most of the stocks. Probably this IT index can go down towards that 33,000 odd level. So if you're holding longs for IT, 34,300 is what you can look at as your stop loss for longs. And once IT index closes below the same, just exit your longs because further pain can come in.
Okay, all right. Those are the moves that we need to watch out for IT stocks also. But let's discuss some stocks in focus. We'll first talk about Polycab because that counter did see a large block deal. Right now, the stock is showcasing a decline of about 1.5% itself. But the stock has seen a good momentum from April onwards. Nirav, what are the next levels that we can watch out for Polycab?
See, for Polycab, it has witnessed 100% retracement. It had fallen from the same level, 7,600 odd, to about 4,500 in the last year or so. And then a good buying action has come in, a higher top, higher bottom formation. But again, it has witnessed some resistance around the same, the third time at the same top of 7620 odd. I believe unless this stock moves above 7620 on a closing basis, it will continue to witness some resistance around these areas. So as of now, if you are looking to buy, just wait on, let 7620 be broken above on a closing basis, only then look to buy again. And after that breakout comes in, 8200 is what the stock can go up towards, but not at current levels. Do not buy right now.
Okay, not a buy opportunity for right now, Polycab. Right, let's move on and discuss about the next stock in focus. That is your Tata Motors, one of the top Nifty laggards of the day, and it has dropped for the second consecutive session itself due to some operational disruptions, which we saw in the company's UK arm JLR following a major cyber attack. The company has been imposed also a penalty and of course the fine also, and that is why we can see the negative sentiment which is playing out on the counter, 2.5% uptick, downtick coming in for that. If you look at the stock, it is, if the entire auto pack has seen quite a good buying interest. However, Tata Motors, that is stuck in a range. What can we expect the next moves to be, and what are the next support levels that we can watch out for the counter?
Yeah, most of the stocks did witness good buying, and somehow, I think because of merger overhang, this stock did not move up much. I believe it is in a range. Very good support area is placed around the 635, 650 odd levels, and it is coming towards its support area. One can look to buy the stock at current levels and on some declines up to that supports of 650, 635. You can keep a stop loss of 620 and hold longs. I believe this stock has completed its downward leg, and now it should start an upward leg for the at least near 3 to 6 month period. And definitely this stock can go up towards 800 odd. So look to buy the stock with a medium term period with 625 as your stop loss.
Okay, all right. Those are levels that we need to watch out for Tata Motors also. Now, shifting focus, let's also talk about Dixon Technologies because that stock did well in today's trading session, but right now it is marginally higher. It has fizzled out majority of the gains that it saw during the major part of the day. But yes, the stock came in the news after it received both a rating upgrade and a higher target price from UBS itself. They upgraded the counter to a buy and they have raised the target price to about 23,000 rupees per share, which is the highest target price which is available on the street for Dixon Technologies. Now, what made them bullish was that the company is expected to benefit from the structural uptrend, and the company is entering the next phase of growth through backward integration into non-semiconductor smartphone components, and that is what kept the brokerage firm bullish on the counter. But yes, in the past 1 month also the stock has done quite well. Nirav, can we expect this target from your end also? What do you expect the next levels to be?
See, for Dixon, there are two or three things that I'd like to discuss. First is, this stock has come towards its previous top, which was done in January of this year. The top was around the 19,000 odd levels, and the stock has come towards those levels. So again, there is a RSI negative divergence in this stock on the longer term charts as well. So what I would really want for this stock is to break above the previous high. Unless it does it, I would not be a buyer, because it looks like it might just do a double top kind of a formation and fall from here. So I would be very skeptical to buy the stock at current levels. Again, this stock has witnessed a huge rally in the last 3 or 4 years. From 2,900 odd to about 19,000. So buying here would not be a good option. So I would suggest, if you're looking to buy, wait for 19,000 to be broken above. Only then look to buy Dixon, not before that.
Okay, all right. Some caution to be observed on the counter for Dixon Technologies as well. But let's move on and let's talk about Hindustan Copper, one of the stock which is buzzing in the trade today. 6% gains coming in for the counter, and the stock has also extended its gains for the fifth consecutive session. And in the last 5 trading sessions, the stock has seen a good upsurge with about 17% uptick coming in there. And so far this month also, the counter has seen a good month. The stock has declined only 4 times in the last 4 weeks itself. Nirav, what can we expect the momentum to sustain, because the copper prices have also hit a 2-month high?
See, I believe this stock can still move up after a long downward trend. This stock has given a breakout, a triangle kind of a breakout formation has been got around the 300 odd levels, and this stock can now reach towards 380, 400 levels. One can still look to buy the stock at current levels and on some declines. 305 should be your stop loss, and about 380 is your first target.
Okay, 380 is the first target for Hindustan Copper then. Let's move on and talk about RBL Bank. That stock also did well in trading session today, 1% gains coming in for the counter. And we did see a brokerage note where Citi has maintained a buy call on the counter and given out a target price of about 300 rupees per share. What the key takeaways from the management did indicate that they believe that the margin pressure has bottomed down in the first quarter, and they expect certain recovery to take place from the second quarter itself. But yes, for the year, for so far this year, the stock has been quite a stunner. Can we expect this outperformance to continue? Nirav, what are you expecting the next levels to be?
I believe this stock can still do well. A rounding kind of a formation in this stock, and a breakout of 270 has also been got. So no wonder this stock is doing well. I believe it can go up towards 300 odd levels very quickly. So from a near term point of view also, one can look to buy this stock at current levels, keep a stop loss of 265, and 300 is what you can look at.
Okay, all right. 300 is what we need to look at for RBL Bank also. Let's also discuss about one of the top Nifty losers, that is your Trent, because that stock has declined in 5 out of the last 6 trading sessions. At this price point, the stock is also at the day's low, 47.39. That is where the stock has been trading at. But yes, what is the next support with that we can watch out for, Nirav, for the counter? Stock is at the day's low.
So this stock is witnessing a lower top, lower bottom formation. Important supports have been broken of 5,000 odd. The next real support is placed around 4,500, and post that at 4,135. So if 4,500 is not saved, 4,100 is where the stock will come to. So if you're holding on, you can keep a stop loss of 4,500 for longs. Below that, just exit the counter.
Okay, all right. That is the view that is coming in for Trent as well. But yes, shifting focus from there, let's also talk about the defense stocks because they have been doing well in the recent days. HAL, BEL, all of them have been doing well in today's trading session. But yes, from a technical perspective, what looks strong in the charts for you, and what are you liking from the defense theme?
I like a lot of stocks actually in this space. After a brief consolidation, most of the stocks look good, and shipping stocks particularly. There is news also, about shipping, but the overall charts look very good. I believe Cochin Shipyard can be bought at current levels. Very good chart formation. It has also broken out above the 1850 odd level, so you can keep a stop loss of 1850 and go long in this. 20 to 50 is where I am looking at this stock can come to. Second stock that I really like is Premier Explosives. It's a small counter, but overall chart formation and volume support is very good. So looking at the overall formation, I believe this stock can move up towards 680, 700 odd levels. So at this point of time, one can still look to buy the stock at current levels with a stop loss of 580 odd, and 700 is what it can come to first.
Okay, all right. Shipping and defense stocks definitely doing well on the back of some news flow itself. But yes, shifting focus from the capex plays, let's also address about car trade tech because there we saw an interesting brokerage note by Elara Capital where they have initiated coverage on the stock earlier this week, and they've also given out a highest target price for the car trade tech, a target price of about 3590 rupees from here on. They believe that the company is quite cash rich, debt free, and can fund its growth internally going ahead itself. Car trade tech, Nirav, what do you believe? So far this year, the stock has seen it as a structural uptrend.
Yeah, so this stock, just like new age stocks, this stock had fallen ever since it came in the IPO from 1500 odd to 370, 350 odd, and from there it has witnessed a linear uptrend in the last couple of years, higher bottom formation. So now, looking at the overall perspective, I believe. Most of the indicators are overbought and it is very difficult to give a buy at this point of time. However, the trend is still positive, and I would suggest if you're holding on to the stock, please do keep in trailing stop losses. Now the supports for the stock are around 2300 odd levels, so you should keep a stop loss of 2300 on a closing basis, because below which this stock can probably witness further downtrend, and it can go down towards 1800 odd. But until then, you can hold on. The next real target is coming up to around 2750, 2800 odd levels from a near term point of view. Don't see long term perspective here, because the RSI is already giving indications that some selling can come in here.
Okay, all right. Cartridge Tech, those are the levels that we need to watch out for. But let's also shift focus and talk about Newgen Software because that stock has been buzzing in trade today. Nearly 5% gains coming in for the counter after the company secured two orders for the two orders in the market. First, the company's UK-based subsidiary has executed a master service agreement with Belgium unit of TCS. And the second is that they have received an order which is worth about 21 crore rupees for Shima General Insurance for software license implementation and annual support services. And that is why you can see some good buying interest that is coming in the counter itself. But yes, Nirav, the stock has been an underperformer so far this year, and the structure has been quite negative. Can we expect these gains to sustain in the upcoming sessions?
I believe the overall structure is still negative, and in the last few weeks or so, it is in consolidation. The stock it requires a breakout above 960 odd levels on a closing basis. Only then one can look to really add positions in this stock. Until then, I would just say wait. Till that breakout comes in. Once the breakout comes in, the stock probable target can be around 1200 odd. On the downside, the support is around 870. So if you're already holding on below 870, exit the counter.
Okay, all right. Below 870, exit the counter. Let's also discuss about another stock in focus, that is your SBI, because we did see that Citi has given out a buy call on the counter and a target price of about 1,050 rupees per share itself. They estimate that the loan growth could see about 13 to 14% of year-on-year growth in the financial year 2026 and 2027. And based on this assumptions, Citi expects that SBI is expected to deliver an ROA of around 1% itself and ROE of 14 to 15% during FY26 to 27. SBI, today the stock has succumbed to the selling pressure, but yes, if you look at the charts of so far this year, it's fairly subdued. But yes, Nirav, what are we expecting from SBI and of course from the entire PSU banking pack, because they have gained traction in the past couple of weeks?
Yeah. So, what really happened in the past couple of months is the PSU pack as a whole, a lot of shorts were built up and they got covered, and they were light on open interest. So, I was expecting a move to come in the last 2 months, but it was not happening. Finally, in this month, you've seen breakouts coming in for the stocks, and I believe PSU as a basket can move up in terms of banks. It can SBI for that matter can move up towards the 925, 930 odd levels. There has been a good breakout in the stock as well. So look to add positions at current level. There's been a decent downside which has come in the last two trading sessions. You can buy here with a stop loss of 840. It can go up to a 925 odd. Along with this, Canara Bank, Union Bank, Bank of Baroda, all of these stocks also look very good. So yeah, as a hedge, you can probably buy banking, where banks can probably give you good returns on the upside while the markets are still falling.
A good hedge in this falling market, the banking pack. But yes, Nirav, now that you mentioned some picks from the PSU banking space, but from an overall market perspective, anything you want to underline here, anything that you're finding interesting?
Yeah. So, as I said, I really like banking. So my pick for today would be Union Bank. I believe this stock can be bought at current levels. Overall, it has witnessed a good breakout about 135 odd. No doubt it has come down in the last hour or so, but still at good levels. You can look to buy the stock with a stop loss of 132. It can go up towards 150 odd. The second stock that I really like is from the oil and gas space, which is HPCL in Petro. I believe this stock has witnessed a very good reversal and good buying action is happening here. One can look to buy the stock at current levels. The stop loss should be 410. I expect this stock to move up towards 445, 450 levels.
Okay, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Nirav. Thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show, where the markets have been fairly subdued. And in the last couple of minutes, we have seen that the Sensex has extended its sell-off to about 550 points, 571 points. That is where Sensex is standing at this point of time. And Nifty has also tumbled by about 170 points. And right now, it has also taken off that 24,900 levels as well. But yes, all in all, it is a very subdued sense of markets, a very disappointing trade overall itself. And if you look at the metal index, that is marginally holding on into the green with about 0.1% gain. Other than that, all of them have succumbed to the selling pressure. If you look at the Nifty IT index, that is showcasing a decline of about 1%. Auto index has also extended some of its loss to about 1% itself, down for the second consecutive session on the back of some profit booking that the investors have been doing. Bank Nifty has also showcased a decline of about 3%, 0.3% decline coming in for the Bank Nifty index. PSU banks also, like yesterday we were talking about PSU banks being on the investors' radar. Today you can see that some sentimental reaction has been playing out, and of course you can see 0.5% decline coming in for the Nifty PSU banking pack itself. India Wix, that has jumped up 1.6% uptick coming in for India Wix, but still at relatively comfortable levels, indicating no immediate panic for the markets as of now. But yes, all in all, it is a very subdued sense of markets, and all in all, we are into a weak sense of markets as of now. But with that, let's quickly move on to our next guest of the show. We have with us Gaurang Shah of Geojit Financial Services. Gaurang, good afternoon. we have been stuck in a range, and the strong domestic inflows, they are preventing any sharp corrections. But fundamentals aren't allowing us strong rallies as well. When do you expect the picture to change?
Well, thank you so much, and good afternoon to all the viewers of CNBC TV 18 and Moneycontrol.com. Well, I honestly, this correction that we are witnessing is after a rally of about 10 to 12 days of uptake. We were at about 24,500, 24,600, and coupled with the news flows of the new avatar of GST 2.0, we saw the markets rally to about 25,450, and then we've seen this witnessing this kind of correction. According to us, first of all, I think it's a healthy correction. Secondly, today was the monthly expiry of the FNO segment for the month of September quarter. Choppiness and volatility was expected. Hope rally was building up. And after the announcement of GST 2.0 on 22nd of September, when it was implemented, we've seen a little bit of profit booking in both consumer discretionary as well as non-discretionary. It's a part of a long-term growth story that we are looking at. And my sense is that from here on, if we are able to keep 24,800 intact, then we should see a steady recovery from these levels. It won't be a sharp rally upwards, but step by step growth in terms of upwards momentum should definitely be visible. I think the biggest driver for the markets to look upwards is going to be the second quarter earnings, which will be unfolding from 10th of October onwards. And I think if that's going to support us, we will possibly take off that higher level resistance of 25,400 to 25,500, and we could possibly look upwards to 25,800 and 26,000.
Okay, 25,800 and 26,000, that is what we'll be hoping for as well. But yes, just let's look at the screen and how we are closing at this point of time. Nifty has given off that 25,000 mark in today's trading session, seeing a cut of about 0.5% itself, 150 points decline coming in for the benchmark index. If you look at Sensex, also showcasing a decline of about nearly 500 points, 0.6% downtake coming in for Sensex as well. Majority of the sectoral indices have settled in the red, apart from your Nifty Metal Index, which has, shown an outlier movement with about nearly 2/10% gains. On the other hand, if you look at Nifty Auto Index, showcasing a decline of about 1%, Nifty IT Index also down for the fifth consecutive session, 1% decline coming in from there. This pocket as well, and majority of the pockets have seen a pain today. FMCG too succumbing to selling pressure with about 0.3% downtick. On the other hand, if you look at India Wix, that remains elevated with about a nearly 2% jump at this point of time. And the top gainers on the Nifty 50, like we were discussing earlier, it includes your Bharat Electronics, Hero MotoCorp, Hindalco, ONGC, seeing a gain of about 0.4 to 2% at this point of time. On the other hand, the top losers continue to be Trent with about 3% downtick coming in there as well. Tata Motors on the back of the cyber attack hit, 2.7% decline coming in there as well. TCS also down with about 3% decline. Power Grid and Shriram Finance, some of the other losers on the Nifty 50. But yes, Gaurang, let me get back to you. You did mention that Q2 earnings will be a key radar, will be a key watch out for the investors as well. What kind of a growth are we estimating? Because the consensus lies that the third and fourth quarter is something that the bulls will be taking cues from. But September onwards, what are we expecting?
So our understanding is that it's not going to be a stellar Q2 earnings season. We are coming out of global news flows which have unfolded thanks to the decision taken by the US administration and President Trump on the tariff front. So it's going to be a mixed bag. But given the kind of positivities in terms of some kind of resolution could be visible in the near future in terms of India-US trade agreement with respect to tariff, there should be better days to look forward to as we go into the future. But in terms of positivity of earnings sectorally, I think defense, cap goods engineering, autos, FMCG, along with, of course, cement sector and power are some of the sectors that should throw in a little bit of positivity. So that should possibly stabilize the market and limit the downside going ahead from here on. Any positivities in terms of international news flows with respect to the tariff and the process which is underway in terms of both the governments talking and coming to a common platform in terms of resolution of US tariff and the trade agreement should possibly act as a trigger for markets to stabilize, control the downside movement, and possibly some amount of positive flows from the FIs which have otherwise been on the negative side. So my sense is that it is going to be more sector specific Q2 earnings season rather than overall positivity.
Okay. Gaurang, also I want to understand valuations. Given the kind of correction we have had compared to the EM peers, be it China or Taiwan, do you believe that the valuations have come down a bit and that that won't be a concern going ahead if earnings, so to say, is to play a catch up?
Well, so we are fairly valued. Let me put it this way. Uh, we are nor cheap, we are nor expensive. But like I mentioned, equity markets, they track earnings. And once earnings is in place, then you will have positivity in terms of stock prices moving upwards or downwards. Hence, I mentioned that it's going to be sectorially positive in terms of some sectors doing well. It will be sectorially negative in terms of some sectors not doing as well. But let me say this. The GST 2.0, along with good monsoon season, which will have a positive traction in terms of demand coming in from semi-urban and rural India, and of course the changes made by the Honorable Finance Minister in the budget, 12.75 lakhs, you don't have to pay any tax. So if you have to put all this thing in perspective, then I think October, November, December, that's going to be the time when you will see green shoots at ground level, adding to the consumption and of course the overall positivity.
Okay. Gaurang, that you're talking about the consumption theme also, and on this consumer piece, do you believe that this rebound is here to stay for the next couple of months then?
Well, I'm surely of that belief, to be very honest. And I think the aspirations is not now limited to big cities, that is metros, tier 1, tier 2 cities. I think the aspirations have now percolated downwards to, tier 3, tier 4 cities, and also to, more importantly, semi-urban and rural India. So, the demand has gone scaled upwards. Earlier, entry-level motorcycles used to be the aspirations of semi-urban and rural India, but I think that's moved on to mid-segment and higher-level segment. So, if I have to just take that cue and the positivity in terms of rural income going up because of good agri productivity, then I think it's going to stay for some time. It's not like it's going to fizzle out in the next month, 2 months, or 3 months. It's going to stay here for a pretty long period of time.
Okay. Gaurang, but what else? What else apart from the consumption and the domestic theme? What else are we eyeing out for? Are we looking at capex plays once again back on track, be it your defense, railways, or shipping stocks? Because all of them did well in today's trading session as well.
So defense is going to be a long-term story. Let me say this. It's not a story for 6 months, 1 year. I think defense, cap goods, engineering, power, these are some of, even including, of course, the data center related, positivities that we are looking forward to. So these themes are going to stay for the next 3 years, 5 years, and forget about, especially for defense sector. Let me say this: it's not only limited to the procurement or new orders coming in from the Ministry of Defense in India. I think the positivities will emerge once we have a larger global presence in terms of international orders coming into the defense sector. So your defense is going to do well, your cap goods engineering is going to do well, power sector is going to do well, data center is going to do well. My understanding is even cement sector is going to do well, to be very honest. And along with that, I think a little bit of positivity in healthcare overall universe, whether it is to do with pharmaceutical manufacturing companies, whether it is to do with healthcare, that is hospitals, or whether it is to do with diagnostics related center.
Okay. Gaurang, I want to understand about PSU banks. So we did see an interesting report that came out by Motilal Oswal. They have pointed out that despite a good jump in market share, valuations still look quite reasonable. So how do you view this space versus the private lenders?
So I think we've seen a very stark difference in terms of performance when it comes to public sector banks and private sector banks. But over the years, after the initiatives that were taken by the government in merging PSU banks, merging two banks into one or three banks into one, or merging State Bank of India subsidiaries into one, or maybe merging large number of banks, and this process is going to go on. So I think this entire merger has thrown in a lot of positivity. It has taken time for it to turn out positive, but I think things are getting onto the track. The difference between public and private sector banks, I think they are narrowing down and they should narrow going forward from here on. And as far as the entire BFSI segment is concerned, whether it is private sector banks, public sector banks, or strong NBFCs, our sense at Geojit is that we should possibly do well in terms of gross net NPA coming down. Provisionings which were provided in the earlier years should come back to the balance sheet. That will make the balance sheet even stronger. And more importantly, credit demand is going to definitely grow, which will possibly enhance the positivities in terms of loan book growth.
Okay, okay. Now that we discussed a whole host of sectors itself, Gaurang, what is something that you are still keeping, you're quite cautious on and you're still on the sidelines?
Well, cautious, a little bit of cautious, not extraordinary cautiousness, but I think infra and real estate. I think the next, and I'm also of a belief, honestly, that government is going to continue its uh, process of changing policies and bringing in new policies. But as of now, if I have to throw a little bit of cautiousness, then I think it's going to be infra and real estate. There's still there is still work in progress for these two sectors. I think once we have a larger clarity in terms of policy changes, these sectors should also contribute. So as of now, a little bit cautious, not overly cautious, but a little bit cautious on infra and real estate.
Okay, infra and real estate, those are the pockets that you're cautious on. But, I was talking to an expert yesterday and they were saying that, affordable housing segment, that could be the dark horse in the entire, entire real estate basket itself. What is your view on that? Do you concur with this statement?
Well, so I think it's all going to be geographically mapped. Affordable housing, if you are going to draw down a larger theme in terms of uh, periphery, geography, that is, which is within the reach of a common man. When it comes to affordability on one side, and when it comes to reach out points, whether it is to do with his or him approach, accessibility to a point of work, or accessibility to transportation, or accessibility to other infrastructures. So there is possibility, no denying about that. But it's going to be very specific in terms of geographies. It's not going to be pan India.
Okay, okay, okay. All right, Gaurav, with that, we have to let you go, but thank you so much for your time and joining us.
Thank you so much. All the best.
All right, with that, let's quickly go to my colleague Yatin Mota, who is joining us from the Mumbai studios itself, where we discuss about how the stocks were the highlight of the day and which stocks did grab the limelight. Yatin, good afternoon. We were hoping to sustain that 25,000 levels, but looked like an absolute struggle for the bulls to keep up the pace.
Absolutely, and we have the expiry day, because of which there were issues in the marketplace. Talking specifically about the volatility in the last half an hour, we saw a steep sell-off which took the Nifty below that 25,000 mark. So yes, I think the expiry-related volatility continues, which has an impact on the overall market.
Yeah, that's right. But yes, let's also discuss about certain stocks which did grab the limelight today, and of course some interesting brokerage notes which also emerged on several selective counters. We'll first touch base for PSU banks because that stocks have been gaining traction in the recent weeks, and there was an interesting report that further enhanced the buying interest in the pocket also. We did see Motilal Oswal coming out with a buy call for SBI and PNB and forecasting an upside of about 15% for both of these counters from current levels. Now, what made the analysts bullish was that the cleaner balance sheets, good provisioning and stable asset quality position compared to the previous cycles is what made their conviction quite strong. Apart from SBI and PNB, the brokerage also preferred Indian Bank and saw an upside potential of about 18% from current levels. Now, majority of these PSU counters have hit their 52-week highs in recent days, but despite their rally, analysts believe that they still trade at comfortable valuations and can deliver steady return ratios in the coming years as well. Now, Motilal Oswal particularly expects earnings for these PSU counters to see a 14% CAGR over the next 2 financial years. They also reinstated the fact that the trend of the market share losses that the PSU counters saw between 2011 to 2021 is long gone, and losses are now going to be slower till FY28. Though some margin pressure could be observed as a near-term risk, but rising free income, moderation in cost ratios, they are expected to keep their ROAs quite stable, and that's what they've written in their note itself. But yes, Yatin, good call coming in for majority of the PSU banking stocks, and we have seen that the PSU banking index have seen 4 good weeks so far. And the fact that in the last quarter also, where PSU banks have fared better than private lenders, is what keeping the street optimistic of better days going ahead.
Yes, and we have the Economic Times, which 2 days back reported that the government is looking at opening up FDI limits in the PSU banking space, looking to trim the stake from 51% to maybe 20% as and when required. So a lot of reforms are also expected in the PSU banking space, and if implemented, obviously it means better global inflows in the Indian banking space.
That's right. Let's now discuss about the defense stock and one particular stock that is your Hindustan Aeronautics, because that stock did well in today's trading session, and we had the CLSA sounding quite a beat on the counter, and they've given out a target price of about 54.36. Now, what drove the optimism? First, the company has reached a major milestone of the first flight of 13th LCA Mk-1A fighter jet, which has beaten its own target of about 12 deliveries in FY26. Now, this particular target beat also eases worries about delays and execution issues that the sector has always been quite worried about. Second, the US-based giant GE Aerospace, they have promised to supply the engines needed for these jets, 12 in 2025 and 20 in the next year itself, keeping the delivery pipeline on track. Another big milestone coming up is the handover of the first fully armed Mk-1A aircraft that could unlock a massive repeat order, which is worth about 67,000 crore rupees, which would further boost the company's strong order book by 35%, and that's what the CLSA analysts have noted out. So put all it together, HAL's order pipeline could be huge, around $54 billion, and with a big fighter jet deal which is expected this year, analysts believe that the skies could look very bright for HAL going ahead. So yes, today also the stock did quite well. But yes, Yatin, if you look at the stock, it has been building good momentum. Today it did well, and the fact that it has exceeded its own target deliveries allays fears of any execution challenges that the sector has been facing, and whether the counter warrants such inflated valuations.
Talking about HAL, today the Ministry of Defence also confirmed the 67 Tejas aircraft orders, and if you look at the overall setup, once they start delivering, the Tejas aircraft, probably they will start getting in new orders. In fact, we have a lot of defence orders in the separate, area, which is the helicopter space, wherein the company is expected to do and get new orders. So yes, across the board, there is no shortage of orders. Probably with the engine supply improving, I think the delivery of the Tejas aircraft will start getting through, which will add to the revenues, profitability. Valuations really can't comment at this stage, because a lot of things depends on the execution to justify those valuations. And if they are able to procure more engines from GE, that would probably accelerate the growth from here, justifying, I think, the steep valuations versus other defense stocks.
That's right. Now let's talk also about the FMCG stock, that is your Tata Consumer Products. Today the stock did not do well, but the entire consumption basket has been in focus after the GST 2.2 reforms. The stock particularly received a buy call from Goldman Sachs, and the brokerage has also raised the target price on the counter to about 1290 rupees per share. Now, what kept the analysts confident in the counter is that the company's performance, wherein margin recovery is expected from the second half of FY26, given that tea prices gets reduced. Now, given that more than half of the tea buying season takes place during the months of June to November, the prices in North India have already fallen by about 15 to 20% this year compared to last year. So, the company will buy tea to cover its requirements for the next upcoming 4 quarters. And this provides a strong visibility for improvement going ahead. Apart from that, the brokerage believes that unlike many other FMCG companies that would undergo the GST rate changes, Tata Consumer will be experiencing a relatively limited headwinds because of the company's core categories, which include your tea, salt, pulses and spices, and they have seen no GST rate adjustments. Now, this has also led to minimal channel disruption, less destocking by retailers, giving the company a distinct advantage over its peers. Apart from these core segments, tea and salt also saw good volume growth in the first half of FY26, and analysts expect it to further improve as the mass consumption revives. So, all in all of these factors do bode well for the stock in the upcoming days itself. But yet, yes, Yatin, the stock has already seen over 20% uptick this year, and analysts are now projecting 15% upside on the counter. So, good pick from the FMCG basket after the GST 2.0 reforms that we were talking about earlier.
Yes, and I think the overall bottom of the pyramid, the consumption stocks are obviously benefiting. Autos, we saw bumper sales coming in, and probably FMCG companies once the GST benefits trickle into the consumers probably helps aid the overall demand as well, especially in a season wherein we have a strong monsoon. But particularly talking about Dixon Technologies, this is one counter which is on the brokerage's radar today. Talking about the UBS report today, they have upgraded the stock of Dixon Technologies to a buy. And the target is now getting revised to a level of 23,000. So, from the current levels, a decent 20-30% upside is what we have UBS, which believes. And the non-semiconductor smartphone components integration will probably boost the overall margins. Not only that, the backward integration projections, according to UBS, should inch up the margins by nearly 1.1% versus a street expectation of maybe 0.4 or 0.5% or something of that sort. Now they believe that from here on, the revenues for Dixon Technologies are expected to reach $11 billion in FY28, and the kind of export potential along with the backward integration benefits clearly will inch up the earnings significantly versus the consensus, and hence probably one of the largest target price that UBS has on Dixon versus the street, which is as I mentioned earlier, 23,000 a piece. Currently the stock at 18,000. So clear 30% upside is what Macquarie is looking at.
Right, that is the view that is coming in for Dixon Tech. Quite a bullish brokerage commentary for the counter itself, and the highest target price given out by UBS. But yes, that's all the stocks we have for now. So far this week, Nifty has already down by about 1.5%, 1.5%. And let's see if there is indeed a pullback from here on, or is there more downside left. Tomorrow is the last trading session. We'll watch out for more moves on the markets itself. But with that, we have come to an end of this edition of Closing Bell. It's a wrap from Yatin and me. But before I let you go, let me introduce you to the Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from semi-registered experts, pre-identified chart patterns and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. You can download the Moneycontrol app today itself and subscribe to Super Pro to get all the alerts on your WhatsApp.